When regulators make a move, especially in a market as disciplined as Singapore, it's worth paying close attention. Ripple just received expanded approval from the Monetary Authority of Singapore to broaden its payment operations, well beyond the permissions it already held. And for those of us tracking how digital assets are moving into mainstream financial plumbing, this isn't just another headline. It's a signal of where regulated crypto payment infrastructure is heading. In this deep dive, we're going to break down what exactly Singapore approved, why it matters, how Ripple plans to use it, and what this could mean for XRP's real-world utility. We'll also look at what institutions are preparing behind the scenes and why this expansion may mark a turning point for crypto-based payments in Asia. If you think this kind of deep dive matters, feel free to hit the like button. By the time we wrap up, you'll understand how this approval fits into a much larger shift happening around global payment systems, and why the next few months may reveal more than most people expect. What MAS approved? The Monetary Authority of Singapore has allowed Ripple Markets APAC to expand the scope of its major payment institution license. Ripple already had permission to operate certain digital payment token services, but this new approval goes much further, allowing it to provide a complete payment stack under regulated oversight. What does expanded scope actually mean? It means Ripple can now legally support end-to-end services such as token-based settlements, domestic transfers, cross-border payments, custody, conversion, and swaps, all within a regulated framework. Instead of acting as a narrow service provider, Ripple is now permitted to run full payment flows for institutions that need both speed and compliance. This expansion sits on top of the company's 2023 approval, but it's substantially broader. It essentially upgrades Ripple from a specialized operator to a fully capable digital payments institution within one of the most trusted regulatory systems in the world. And while this approval is technical, it opens the door to something wider, because the regulations Ripple must meet in Singapore create a benchmark for how to build trust across borders. But that wasn't the only development quietly unfolding, and the reasons Singapore granted this authority help explain the bigger picture.
Why Singapore granted the expansion? Regulators don't widen permissions without a strong foundation. Ripple's long-standing presence in Singapore provided a clear track record of compliance, operational stability, and engagement with institutional partners. Singapore's regulators operate with a trust but verify approach, meaning companies must show consistent discipline over time before they're allowed to handle larger portions of financial infrastructure. Ripple built that foundation years ago. The company established its Asia-Pacific headquarters in Singapore, staffed compliance teams locally, and built partnerships with banks and fintechs across the region. Over time, this created a level of confidence that Ripple could manage higher volumes and more complex service offerings without compromising regulatory standards. Another factor is Singapore's regulatory philosophy. MAS encourages innovation, but not at the expense of oversight. Singapore wants to attract high-quality digital asset firms that can demonstrate real corporate governance and technical resilience. Ripple's institutional focus, rather than speculative products, aligned well with that goal. However, the real shift came just days later, when we began to see what this expanded license allows Ripple to actually deliver for institutions. New capabilities Ripple can now offer. With this approval, Ripple isn't just adding a few features. It's gaining the ability to serve as an institutional-grade payments rail for businesses that want digital settlement without building blockchain infrastructure themselves. Banks, fintech platforms, and corporate payment providers can now plug into Ripple payments through a single integration and access a complete suite of tokenized settlement tools. Ripple can now legally support token-based settlement using both XRP and its regulated stablecoin RLUSD. Instead of relying on slow correspondent banking networks or fragmented liquidity providers, institutions can use Ripple's rails to move value quickly and transparently. This includes services like custody, on-ramps, off-ramps, payouts, swaps, and the ability to combine domestic and cross-border transfers within one system. For regulated institutions, reducing operational friction is a major incentive. When a company can handle these flows under one licensed provider, it reduces compliance complexity and integration costs. If you want more updates like this, feel free to subscribe. But as Ripple expands what it can do, the strategic value of Singapore becomes even more important. And that leads directly into Ripple's broader Asia-Pacific strategy. Impact on Ripple's Asia-Pacific strategy. Ripple has long positioned Asia-Pacific as a growth engine, and Singapore has been its center of gravity. With this expanded approval, Singapore becomes more than just a regional headquarters. It becomes the operational hub for Ripple's institutional payments across APAC. This means banks and fintechs throughout the region can onboard faster because they're connecting to a regulated institution recognized by one of the most respected financial authorities in the world. Singapore's regulatory clarity gives institutions legal certainty, making them more comfortable adopting digital settlement solutions. The approval also strengthens Ripple's competitive positioning. The cross-border payment space is crowded with legacy providers, stablecoin issuers, and blockchain networks, all aiming to serve corporate money movement. Ripple's ability to offer a legally compliant end-to-end system gives it a notable advantage in markets where institutional players prioritize risk reduction. However, strategy is only as strong as adoption, and the next stage depends on how institutions choose to integrate Ripple's technology.
Institutional adoption signals to watch. The real indicators of momentum won't come from price charts. They'll come from institutional behavior. One signal will be banks quietly integrating Ripple payments for remittance corridors in B2B transfers. These integrations usually start small, but once a network effect forms, expansion tends to accelerate. Another sign will involve fintech companies using XRP or RLUSD to manage liquidity between markets. These firms often serve as early adopters because they prioritize speed and cost efficiency. If they begin using Ripple's system as part of their core operations, it suggests confidence in the framework. Corporate treasury pilots will also be important. Many multinational companies are exploring tokenized settlement for supplier payments, but most haven't moved to production. Ripple's expanded license allows the company to support these pilots under strong regulatory oversight. As institutions gradually adopt these systems, real-world usage of tokenized payments becomes measurable, and that brings us to the potential impact on XRP. Potential implications for XRP utility. While Ripple's products don't require XRP for every transaction, the token still plays a meaningful role in certain corridors where it acts as a bridge asset or liquidity mechanism. If institutions begin using these corridors more often, overall utility could grow in ways that are more stable and predictable than speculative trading cycles. Regulatory approval adds credibility. When institutions evaluate whether to use XRP-linked settlement rails, having MAS oversight helps reduce perceived risk. Banks and corporate clients care about governance, transparency, and compliance, and Singapore's framework reinforces those values. Liquidity in the region may also deepen. As more exchanges, market makers, and institutional partners operate under a unified regulatory environment, XRP liquidity in Asia-Pacific becomes easier to access and scale. Liquidity strength is a crucial ingredient for reliable settlement. However, XRP's potential utility only tells part of the story. Ripple's expanded license also creates a regulatory template that could influence how other markets view digital settlement.
Regulatory ripple effect beyond Singapore. Singapore often sets standards that other regions watch closely. When MAS grants broader permissions to a digital payments company, regulators across Asia-Pacific take note. Some may adopt similar frameworks, especially those wanting to attract institutional payment flow while maintaining strong oversight. Ripple may use this momentum to pursue additional licenses in jurisdictions seeking to modernize their financial infrastructure. Europe, the Middle East, and parts of Asia have already begun exploring pathways to regulate digital settlement providers. This makes Singapore's decision a potential catalyst for broader regulatory alignment. For markets still forming their digital asset policies, Singapore's approach offers a blueprint: support innovation, demand compliance, and scale gradually. Firms that operate globally often prefer consistent regulatory treatment across regions, and Ripple's expansion could help accelerate that trend. But forward momentum also depends on external factors, some driven by markets and others by broader economic shifts.
Market impact and forward indicators. Broader market impact will come from how liquidity and settlement patterns evolve as institutions begin testing Ripple's infrastructure. Exchanges and market makers in Asia may expand liquidity hubs to support new corporate and fintech users. More liquidity can translate to stronger rails for token-based settlement. Corporate payment platforms looking for transparent, predictable settlement methods may start piloting tokenized workflows. These early implementations will provide data on transaction speed, cost reduction, and operational reliability, factors that institutions evaluate before scaling adoption. Competition among stablecoin issuers may also increase. As regulated payment providers gain permissions in Singapore, firms offering digital dollars or tokenized liquidity will try to position themselves within this ecosystem. Ripple's regulated stablecoin, RLUSD, becomes part of this landscape, competing in a space where regulatory compliance is often a deciding factor. And finally, macroeconomic conditions, such as regional trade flows, interest rate environments, and dollar liquidity, will influence how quickly companies adopt tokenized settlement. Institutions typically move faster during periods of economic efficiency and slower during uncertainty. Ripple's expanded approval positions it well, but adoption will unfold at the pace institutions find most responsible. Ripple's expanded approval in Singapore isn't just an internal milestone, it's a signal of where regulated digital payments are heading. By allowing Ripple to operate a full suite of tokenized settlement services, MAS has effectively acknowledged that blockchain-based payment infrastructure can operate securely within a regulated financial system. This strengthens Ripple's position in Asia-Pacific and opens the door for broader institutional use of XRP and RLUSD as part of real-world payment flows. While the impact will unfold gradually, it points to a future where digital assets are embedded directly into the financial systems people and businesses use every day. As with any major shift, the most important developments will come quietly. Bank integrations, liquidity growth, regulatory alignment, and corporate adoption. If those pieces continue moving in the direction we're seeing today, the next year could reshape how global payments function. If you'd like more deep dives like this, feel free to subscribe and share your thoughts in the comments. Your feedback helps guide what we cover next.